What's happening, investors, is the video log takes 30,000 to a million over here, and I haven't done a very good recovery so far in the account, but I'll show it all to you. And after I show the account, I want to talk about a very important topic to me, which is risk taking, okay, and how that relates to what I'm doing right now and how I think about it in terms of how to allocate my investments outside of just having a thesis. All right, so I'm gonna go into the browser here. I'm looking at 165,500. That's quite a bit up then from like a week ago. And I'm actually, the month chart is looking like it's rounding the bottom here, but it doesn't necessarily mean that I'm out of the woods or that we're out of the woods collectively as investors from, if you're investing into stocks. It doesn't necessarily mean we're out of the woods. Could be just another bear market rally. It's very, very likely. This year was a bear market rally. Maybe I should actually look at the SPY instead of my account because it doesn't necessarily correlate very well. But where's the SPY here? All right, so the SPY 1-year chart. So we had a bear market rally here that peaked out on March 29th, a lower low in June, and then a lower high in August 16th, and then a mini bear market rally. And now it looks like we might be going for a third round in a bear market rally. My thesis or current thinking at the moment when it comes to the markets is that we're bottoming in November, and I've said that a couple times. I think that the inflation print for October is going to come in a little bit hot, and traditionally October has been pretty hot when it comes to inflation, and I think that will mark kind of the bottom in the market because that's going to be max pessimism when it feels like inflation is never going away. But in reality, actually, I think the month-over-month figures are not too bad. So as the next year comes rolling out, their year-over-year inflation figures are going to look a lot more friendly, and therefore I think that the market's going to start discounting the future, which is the future is going to look like less rate hikes and better environment for stocks overall. So with that said, I want to talk definitely deeply about the whole risk issue and why I'm almost fully leveraged right now. I was fully leveraged, 100% leverage, not too long ago, maybe a few days ago. I did not make a video, but I've delevered a tiny bit now, but I'm still pretty levered. I'll show you in a sec. So going into the account, sitting at 165,500. This is the day chart. It's down 1% or 1.04% or $1,700 and another 500 in after hours, but we're not going to count those. This is the 1 week. I'm looking at an 8% gain, which is substantial. I think more than the market. We'll compare all these numbers to the market in a second. So all these charts have all of a sudden turned green. The 3-month chart looks pretty bad, still down 16%. The year-to-date chart looks a bit better, but still negative 11%. The 1-year chart is at negative almost 11 as well. And this one everybody asks me, I hate showing this chart, but the all-time chart looks like this. I started investing in August 28th, 2018 with this account. Seriously, that's why it looks so flat beforehand. I'm up 129% all time, or since I was up 3%, but when I started investing this, we'll just discount that. You can call it 126% if you want, whereas the market's up about 50%. So 2.5 times or so the gains of the market during the same time period, which I'm fairly proud of, even though this huge drop here decreased my numbers quite a bit. I was at 194%. Now I'm only at 129. Moving on. So this is the all-time chart. These are all my positions at the moment. I have, I'm going to just skip through them real quick. I'm not going to explain all my positions. You can pause the video player at any moment to try to figure out the exact position. All the information is contained within this little box, including the ticker symbol, the strike price, whether it's a call or a put, the expiration date, number of contracts, and whether it's a sell or a buy. The numbers on the right indicate the change in value of the position. In white is, of course, the value of the option going up or down on the day, and then the percentage terms on the bottom in green or red. Scrolling through. These are the stock positions. I actually bought some Chinese ADR stocks, and after the bump, I got rid of them. I'm trying to sell the VIPS as well, but it looks like I might not be able to hit my limit order. Anyway, just because I'm trying to delever in case the market turns badly, I want to be able to have some staying power and survive. Apple, I've sold 10 shares of Apple, so I'm back down to 700. So realty income was about flat. Apple's down 1.67%. I'm guessing that it's being dragged down by negative earnings reports by Google and probably Microsoft. Don't know. But it's being dragged by the other giants, and it should be. I mean, all these kind of companies walk a little bit lockstep, and so their earnings affect one another, and just you know, because the business in general is slowing down for one company, it must be slowing down for another giant because it's such a macro picture, but also for technical reasons too. Like for example, if let's say Microsoft misses and then people start selling Microsoft, they don't just exclusively sell Microsoft stock, right? They might own Microsoft in some kind of a fund, some kind of like an ETF that encompasses all markets. So when they click that sell button, then it sells every single other company, and there's a lot of like knock-on effects from selling a specific company that come into play in the markets. So anyway, moving on. Mainstream Capital pretty flat, in realty income pretty flat. Paramount was down 1.37%, and so does Smith and Wesson. I think after hours though, kind of landed flat on the day. Yeah, it was up 0.09, minus 0.83 in the after hours. See if that sticks. We'll see. We'll find out. So let's go into the account investing tab. Take a look at the account. There's a bird's view. So I was at 320,000 total invested capital here. Now I'm down to 315, which is not a big change. But it's no longer 100% levered. It's more like 90. What is it? Can't do math. 94, 95%. So I'm 95% levered in the moment. You want to double this number because at 50%, that means you're 100% levered, right? Half of the money is in leverage, half of the money is yours. So that's 100% leverage. I don't know why they say it's 47 here, but whatever. I guess of total market value, that would be correct, right? So 50% of it is borrowed money, 50% of it is mine. Therefore, I'm 100% leveraged. So this is the stocks by total return. Apple's up at the top now, plus 21,000, and total equity is 104,860. And then sorted by equity, Apple's at the top again. Smith and Wesson is the second biggest company that I own, and that is 91,460. Just a fun fact on Smith and Wesson, I own 0.02% of the company, which is quite large percentage for a public to own from a public company. So big owner. Well, I guess I borrowed the money from Robinhood, so technically they're half partner. Robinhood owns half of Smith and Wesson. Or I should say 0.01%. All right, moving on here. That is the account. Let's go into the relative performance. So we went through all these numbers, and now I'm going to compare it to the S&P 500 via the SWBI, which is the S&P 500 ETF, exchange traded fund. So I'm going to click through. Let me see. So one day was 0.7 down 0.74. 1 week up 4.31. So I performed twice as well on the way up. So that's good. 1 month up 4.18. 3 months down only 2.66. So they're really killing me on the 3 months. Let me see on the 1 month. What was I? So 4.18. So 1 month plus 2. In 3 months, they're really killing me on the 3 months. And then year to date, 11.11. Let's see the SPY. So I'm losing to the market on these metrics here. Yeah, definitely losing. On the 1 year though, I'm winning. So I'm actually performing 4% better than the market, which was down 16%. I was down like 11%. And in the 5 year, you can see that the market performed up by 50%, and then my account was 126%. So more than 2 times better still, even after the recent drop. So that's the relative performance. Hope you're satisfied. If there's something you want me to cover when it comes to the accounts, let me know. Maybe you want to look at this. I don't know. Anything you want to see about the account, it's right here for you. This even my watch lists. If you want to see the watch list, you can browse through that. If you want to see something about the account or go into depth into any positions, I am free to. This is a public account for me, so share anything you want. Just ask and I'll show you. So now I want to go into my topic, right? So I've been getting a lot of messages from a friend or two or three that think that I'm being a little too crazy with the leverage here, and that I'm gambling and doing irresponsible things, and they don't think that's a good idea, right? Obviously, and many people might feel that way, but I personally don't look at it from that perspective, right? There's a few reasons for that, okay? One of the reasons is my biggest strengths, I think, as an investor is a carryover from my athletic days, which I used to be a tennis player. And there's this concept that I want to talk about in tennis, okay, and in other sports. But in tennis, when you're pushed against the corner, okay, like when you're thrown out of the court, and your opponent has just attacked you and is coming up to net to finish off the point, you're presented with two real choices, okay, two real choices. One is to do anything you can to try to make the ball into the court. Right, it's a difficult shot, very low chance of doing anything. So you're just trying to get the ball back into the court, so maybe you can live another day, right? So that is the safest option, right? That's the safe option here considered. Would you agree? If I compare it to the other option, which is to hit a really low percentage shot around the player and go for a winner to pass them because they're at the net, or a super difficult angle to pass them on the other side, okay? Or even if you're thrown far enough around, go to the side of the net. You can actually go on the side of the net. I don't know if you knew that. In case you're not a tennis player, you can hit on the side of the net. You don't have to go over it. And try to hit a winner that way, which seems like the riskier play. I mean, right? It's risky to go for this incredible, highlight reel, ESPN top 10 plays type of shot when you're pushed all the way outside the court and your opponent's at the net blocking every single possible pass. But it's actually not, okay? And I'll explain why. Sometimes in tennis, it's less risky to be more risky, okay? Because you don't want to give up on the point. There's no way you want to win the point. You want to lose the point, right? So the safer option, think about the result. If you're being safe, if you just get the ball back into the court, then the opponent being at the net has a really high chance of hitting a winner off of that shot. Because I'm thrown out of the court, all they have to do is bump it into the court and they win. Right? Or more likely, since we're playing high level tennis here, they'll smash it in, or they'll just angle it so severely that no human possibly could ever get to the ball again. So I would assign myself a 1% chance of winning that point. You see, I'm being safe. I ran the ball down and I pushed it over to the other side, taking extreme care to make sure that I get that ball inside the court. And I make it inside the court. I have, let's say, a 99% chance to make it inside the court. But because my opponent's at the net ready to put away, that brings my chances down to like 1. Okay? I have 1% chance of winning that point. And that's what we're after here. If you take the risky route, maybe I make 1 shot out of 20. Okay? Maybe one shot out of 20. If I hit 20 shots, I'll make 1 of them. And what's my percentage of actually winning that point? Well, if I make one of those incredible shots, I'll pass my opponent and I'll win. So I actually have 5% chance, right, of winning that point versus the 1% chance of winning in the other scenario. Even though I make the shot, I'll lose the point if I'm being safe. So in this case, by taking up more risk, I have 5 times the likelihood of winning the point. And that might sound a little counterintuitive, right? But that's how I think about it as investing. Like, I don't want to leverage at the top, okay? I want to make sure that I make as few mistakes when I'm ahead as possible, right? That's when I'm trying to be safe, when I'm ahead. When we're at all-time highs and riding out, I want to reduce leverage. I want to, raise some cash even if I was doing well, okay? Maybe put like 10% of my position in cash. I did that in 2020, actually. Well, I don't want to go too much into mistakes, but I made some mistakes as well along the ways, of course, and they're all here for you guys to see. But actually, if you look at the videos in before the crash of March 2020, I was actually had some cash stockpile that just went into the market a little too quick, and it cut me too hard, and I bled too much. But I actually had 10, 15, 20% of my account was cash. And I was looking to do something similar on this last run-up, but I only got to about 10% margin from almost 80 or 90%. So I reduced it all the way to 10%. But now, as the market is dropping and dropping and dropping, I'm going harder and harder into margin, okay? Because I have that same philosophy. So the harder the market presses, right, and drops and pushes me in a corner, I have almost an obligation mathematically, right? I have an obligation to take more and more risk. I know it's counterintuitive, but if you think about it from a winning perspective, like if I were to win the entire war, it's not a matter of, okay, I want to just preserve capital, and when there's a downturn and when things start looking up, I'll just enter again. But by that time, if you think like that, if you think like a technician, by that time the move is already over and you've missed the boat. The thing is, I'm either gonna make this account work or it's not gonna work. Okay, those are the only two options. I either win or lose, right? Okay, if I lose, fair, I've lost everything in the account, that's fine. But if I win, the reward is big. Okay, so I'm not gonna give up on this point, on this tennis point. Okay, I'm never gonna give up. So if the harder I'm pressed, I'm gonna go until I miss that shot or I make it. We'll see in the end, right? So that's my philosophy here, and this is why I'm doing it. And it makes mathematical sense from my perspective, from my mental standpoint, and not only that, but there's many other reasons for doing it this way. For example, the more that the market sells off, the more opportunities are there. We're outside of the tennis analogy now. The more opportunities there are out there. More companies become cheaper or less valued by the market and less loved, and so they're a better deal, right? That's a bit more intuitive. Okay, so why wouldn't you want to borrow money and buy this company when it's really, really cheap? So that's just logic right there. It just makes total sense. So I'm just trying to defend and justify my position here, because you can see how leveraged I am. I mean, at this point in the market, if we go to the investing again, I mean, you can just see it right here. Look, so I have 150,000 margin available, and I've used 149,500. It's actually a bit more than that. I've set a borrowing limit for myself because I just want to take that money out of leverage, but I actually have more leverage available. I don't know how much, 10, 28,000 more that I could borrow. But you can see how aggressive this is, right? I mean, I've borrowed $150,000, all right, against my $165,000 portfolio. So I'm really fully levered down. I mean, almost fully levered at this level. So I'm trying to defend that position and look sane. I don't know. I mean, what do you guys think? Am I insane? Does any of what I said make sense to you or resonate, or like do you think I'm taking too much risk in your opinion? Where do you stand on this debate, or how do you think about the markets when it comes to taking risk or taking on leverage and getting taking money on margin and buying stocks with it? So let me know what you think about what I said there. All right, I'm gonna end it right there. Peace out.